This is how all markets look over the long term. A series of similar crests and troughs form at regular intervals. This is how markets sometimes look in the short term. Stock markets are known to reward the patient investor. The best investment tip there is stay invested for the long term, because eventually the markets get corrected and wealth is created over a long term. The volatile markets that scare many an unseasoned investor usually exist in the short term. You may get supernormal profits or huge losses if you invest for short periods. This is not the ideal way of investing. Instead, invest regularly at fixed time intervals to benefit from averaging the cost of your investments and stay invested over a long period to benefit from the cyclical nature of the markets. So, tip number 1 is invest regularly and be patient. One should not wait for the market to be at a specific level to invest. No one can time the markets perfectly, and staying out of the markets means that you lose money-making opportunities. The second tip is don't time the market. SIPs help make the best of market volatility by assigning you more units when the markets are down and less units when the markets are high. The third tip is that one should not stop existing SIPs based on the market conditions. Also, if there is a change in asset allocation, one should rebalance the portfolio to get the asset allocation right. The fourth tip is that you should review the fund performance every year. Investing in stocks through mutual funds is a much safer option, as fund managers do in-depth research on the companies they invest in and add in the portfolio. They then construct portfolios to endeavor to deliver the best returns in line with the objective of the fund. Tip number 5. Rely on professionals. To summarize, here are the 5 tips again. Tip number 1. Invest regularly and be patient. Tip number 2. Don't time the market. Tip number 3. Continue with systematic investment plan. Tip number 4. Review and rebalance your portfolio at fixed time intervals. Tip number 5. Rely on professionals. To know more about investing in mutual funds, contact your financial advisor or visit www.hdfcmfinvestwise.com. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.